Okay, we look at question 3. Okay, number 1, compute the residual expenditure, the balancing charge or allowance on the office equipment which was written off during 2012, and determine the balance of the qualifying plant expenditure and the residual expenditure for the remaining office equipment carry forward to 2013. So 2012 and then 2013. Compute the industrial building allowance for 2012 for the factory building and the warehouse, and what's the residual expenditure to carry forward to 2013. Explain the implication of each of option for construction of the warehouse from the perspective of claiming IBA, and which one is more efficient. Okay. Oxygen is a manufacturer of digital products based in KL, which makes up its account annually to 30th June. OSB is also a contract manufacturer for an overseas company which imports raw materials, which is processes and exports. The detail of the fixed asset acquired by OSB for 2011. Now they bought a factory, 1 million. The warehouse building used solely for import, processing and re-export. So the warehouse which is meant for export, 300, and various items of office equipment, 60. The office equipment which all acquired on 6 June 2011. On 20th April 2012, one of the items which cost 10,000 was damaged in fire, and it was written off based on commercial reason. There was no insurance coverage for the asset damage. Now, during the board of directors meeting on the 2nd June 2012, it was determined that there was an increase in demand of product. So the finance manager was instructed to look into constructing a storage warehouse exclusively for the Malaysian market. He's considering the following two options. Option 1, he will construct a warehouse within curtilage of the current factory. Number 2, construct a warehouse 20 kilometers away. Now, this is purely for Malaysian market. So the warehouse does not involve export. If the warehouse is meant for you to store and export, then it can be treated as an industrial building, which is where they mentioned to you in number 2. But this is purely for Malaysian market, so it's very different. Okay. All right. Now, first of all, A1. They are looking at office equipment. Now we look at it in this way. There's actually two equipments that we are dealing with right now. Okay. One is the 10,000 ringgit that you dispose them in 2012. And the other one is that you didn't dispose. Alright now? So if that's the case, I think it's easier if we could separate the equipment. So the office equipment that is destroyed in fire, and other office equipment. Okay, so this is my presentation. You can see examiner's answer later on and you see which one you feel more comfortable. Alright, I think this way can be clearer lah. Okay, this office equipment you buy them in 2011, so you're gonna claim IA and AA 2010, so 2000, and then 1000, 5000. So the residual expenditure is 735. Okay, now YA 2012, you have AA 5000. Now you won't claim anything in the 7000 because it's already disposed, right? So actually you don't need to write anything, but I just put a nil there, so let you know that we ignore it. So the RE is 30. Okay, RE is 30. Okay, disposal of the equipment. Now you write off for no value, right? Okay, it's written off for no value, so the amount is 0. The RE is 7000. So what do you get? A balancing allowance in 2012, 7000. So if you show separately the two assets, it's probably easier to follow the numbers, because examiner combine everything right at the beginning, and then second year he take out the 10,000, so I find it's a bit messier. So you just might as well split asset by asset right from the beginning. In fact, in real life you have to calculate asset by asset. You don't calculate everything in total. Okay, alright, number 2. Now the second part is they want you all to work out the industrial building allowance. Now there are two industrial building, right? One is the factory, one is the warehouse. So the qualifying building expenditure is 1,300,000. Okay. Now they bought this in 2011, so you get initial and annual. Now usual rate is 10% and 3%. A warehouse which is meant for an export market is treated as an industrial building that you have no IA, AA 10%. It's a special treatment. Okay, no IA, AA 10%. So the RE will be 870, 270. Now why 2012? AA again, 30, 30, So your RE is 840,240. That's it, 4 marks. So the most students made mistakes is they forgot about the warehouse got the special rule. So what they did was they take IA 10%, AA 3%. Okay? But for those students that they take IA 10%, AA 3% all the way down, we didn't give them 0. There are some marks given. Okay? So but very little lah, very little. Okay, so that's the issue that we have here in terms of the part number 2. Alright, part number 3. So what's the main difference between part number 3? They're very simple. This one is to test whether you remember the definition of a factory. Now, the definition of factory when it comes to store, okay, when it comes to store. Now, a store is taken as part of the factory if it's within the same curtilage of the premise used as a factory. So option 1, this will be treated as factory. You can claim IBA. But option 2 is different. See, option 2 is not for export. And if not within same curtilage, then it's not industrial building. Then there is no IBA. So there's only difference that you must explain here. Okay, for number 3. Now option 1, because it's within the same curtilage of the factory, warehouse is treated as factory, so you're eligible to claim IBA. Now there's a key point you must explain here for option 1. Now for option 2 is not within the same curtilage, you write in full and because it's not for export purpose, so it's not an industrial building, so there is no IBA. Now in that case, option 1 is more tax efficient. Okay, right, that's it. So 3 questions from last exam. 2 more questions you cannot do yet because you don't have the knowledge. Okay. Right. If you have done, return to page 45. Okay. So I do this set because I need you all to know your examiner style. Now, let's go back to page 45. December 2009. Okay, this is a personal tax involved partnership. So it's a 30 marks question, alright? It's a 30 marks question. But the question by itself is a very short question, alright? So So because the marks allocation, a lot have been given for the working. So that's why very short question but a lot of marks. So in the question like that, if your workings are not detailed, you lose a lot of marks here and there. Okay. Now they want you to compute the provisional adjusted income and the divisible income for the partnership for 2009. 7 marks there. And based on the information above, work out the total income for each of the 4 partners. Okay. Now marks will be awarded for the use of accurate technical term to describe figures comprising stages of the computation. That means if you mention the word, for example, statutory income, you get marks. Aggregate, you get marks. Total, you get marks. Now, but which one we don't know lah. The examiner won't tell you. So you make sure you describe them correctly. Okay. The partnership firm of May, Teng and Yusof closes its annual account on 31st December, but Yusof ceased to be a partner on 30th June, and Jane joined the partnership on 1st July. Now, one partner left, a new partner joined, but 2 existing partners remain in the same and the old partnership. So if that's the case, the partnership business is continuing. Okay. Now, so we just deal as a change of partnership. Okay, now they've given you the partnership agreement that they provides that salary and interest on capital for May, Teng, Yusof and Jane. This is all the amount. Okay. And they given you the profit sharing ratio. It was 2 to 1 to 1, 1 to 1 to 1. Okay. The partnership profit before tax for 31st December 2009, 276,900. And that's after taking into account the following. First, they receive rental from the lessee of the partnership's premises. So they have some property lah. Then they get rental. So rental income is 4D. So you have to take it out from the partnership. Okay. Depreciation, as usual, we add it back. Then they tell you private expenses for May, which include private use of the car, Yusof, medical expenses, the partner salary, the 84. Now this 84 corresponds with the 84. That means the whole amount that you see here is the exact amount they give to partner. That's why the 84 is the same as this 84. Now interest on capital 10,001 is the same as this 10,001. That means there's no apportionment. Okay. Unlike in the note I tell you in my question, I put that per annum. Then you have to apportion. Okay. That's why you must check carefully the figure before you adjust. Okay. Then they donated on the 2nd May 10,000. That means this is when the partnership is still the old one. And they donated again on the 3rd of July. This is where the partnership is the new one. The unapproved donation is 6th of October. Okay, so the capital allowances for YA 2009 are expected to be 21,000. Okay, so first of all, we got to work out the PAI. Now, the partnership profit before tax is 276,900. Then what do you do? Add or minus? Add or minus? From profit usually what do you do? Add or minus? Usually we add, right? We add non-deductible expenses. For example, like depreciation, we add back. Now, of course, in this case, we have one extra adjustment. Is the rental income. So the one we minus, okay? So add back. What are the non-deductible expenses? Okay, depreciation, 33.1 lagi. Add back donation. Now, the approved donation on May 09, 10,000. Approved donation on July 09, 18,000. And the unapproved donation on October 4,000. So I remember this particular sitting, some student, interestingly, because they see the word approved and unapproved, so the unapproved they add back, the approved they didn't bother, because probably they thought, hey, approved can deduct, okay? Now actually you should know the word approved, unapproved is not about deduction. It's about later, after aggregate, can you claim or not? So approved you can claim, unapproved you cannot claim. Now what else that you cannot claim here? None, all done already. So we add back partners entitlement. So I want you all to show workings properly, their entitlement. So that's why you should show Mei Peng, Yusof and Jane. So first of all, the salary, 30, 36, 18, 84. Right, interest is 57, 24, 2, 10,001. What else? Private expenses, which is 3,000 for May, 4,000 for Yusof, so 7,000. That's it, right? Okay. So that's your provisional adjusted income. Is it 3, 4, 5, 100? That's my figure, right? Sorry, it's 425 100. Now, once you come to PAI, the next step is very simple, right? you take the entitlement, you minus out exactly. So we minus partners entitlement. Now this one you do not need to show the breakdown because the breakdown is working. You've got the figure, means done already. So 84. Interest on capital 10,001 and private expenses 7,000. So it's 324,000. Okay. Now this divisible income, because it's a change in the partnership, will be 612 612. So 162 162. Okay. Alright. So part A so far is what you need. Now you move on to B right now. So what they ask us now in part B is to work out what's the total income for each of the partner. Okay, that means you're doing a normal tax com. Now to do a normal tax com, you will start with your partnership, right? So the partnership business. Okay, the tax computation for May, Teng, Yusof and Jane. So 4A, partnership business. Now there's a share of DI for January to June. Now that share, it's based on a ratio of 2 to 1 to 1. So 2110. The ratio you indicate. Okay, so amount we calculated is 162. So we get 81, 45, 45, nothing. Then July till December, the ratio now changed to 1 to 1, nothing and 1. That means divided by 3 lah. So 162, if we divide it by 3, we get 54, 54, and then nothing, and then 54. Now, so the share of DI, you just need to apportion. And anyway, you've got the figure here. Now, after that, the next step is very, very simple, right? You have got the workings done here, what? So copy this part, take the whole thing, and put it back into the partner here. Okay, that's all only. This is what partners are getting. So just take this and copy back. So I just leave it here for me to refer lah. Salary 30, 36, 18. Interest on capital 5724 2000. Private expenses 3000 4000. Okay, so I just move in all the entitlement. That's it. That's the adjusted income for partner. $173,700. Now partners, they will get CA, right? Is there any CA mentioned for the partnership? Yes, they mention at the bottom that the CA is 21,000. So what's the rule about apportioning CA? You follow the ratio at the end, right? So the ratio at the end means is 1 to 1 to 0 to 1. So each partner be getting 7,000 each. So 7, 7, no CA, 7. So the statutory income is 1667. 1, 2, 3, 5, 4, 6, 9, 67. Right? That's the partnership. So is there any non-business income that we see here? There's one, right? Which is the rental. Okay, so there's a rental. Now, so this rental will fall into 4D rental income. Now, the rental belongs to the partnership. Okay, the rental belongs to the partnership. So you must apportion back to the partner according to their ratio. So the ratio is exactly the ratio you see when you look at the period that we have here. So in that case, what we're going to do now is we're going to apportion this into two periods. So from January to June, and then from July to December. Now the rentals comes to 9,000 and 9,000. So ratio is 2110, 1101. So that will be 452250 2250, and then 3,000 3,000 3,000. That's the rental income. So aggregate would be 1742 128750 49150 70. Okay. Now partners will get a claim of the donation because there's a donation in the partnership. Okay. So approved cash donation. That maximum is 7% of your aggregate income. Now they donated 2 times. One is on the 2nd of May. So if it's on the 2nd of May, you will apportion using the original ratio. So the donation on 2nd of May was 10,000. So in that case, we get 5,000. Now 5,000 is within 7%. And then 2,005 is within 7%. Now 49,150, 7% is 3,000 plus. So 2,005 is also within 7%, no problem. Okay, then they donated again once more on the 3rd of July 09, and this time you have to use a ratio of 1101. That means you will get a claim of 6,000, correct? Okay, so check and see. 174,200, 7% is 12,000. So 6,000, no problem. Go ahead. Now 128,750, 7% is 9,000. So 2,005 plus 6,000, also no problem. Go ahead. Now 7% of 70,000 is 4,009. You donated 6,000. You restrict to 4,009. Maximum 49. Follow? Right, that's it. They just want you to work out until total income. Now we solve 27 marks. But really look at it, it's not very tough question. Okay, so this question is basically a bonus if the student know exactly the step. Now, but those students who forgot how to handle partnership, they did very badly. Okay, if you know, then substantial of the mark should be in your hand. Now part B, they ask you state what factors that will determine existence of a partnership. Now the factors that determine existence of partnership, the usual one is what? There must be sharing of resources. Okay, so you must have 2 or more persons that they agree to combine their resources. Okay, they combine their resources, their time, their labor, their skill, their capital, that they will carry on a business with an aim to share profit and loss. So this is what we need to see if partnership exists. Okay, so you must have 2 or more persons combine resources to carry on a business to share profit losses. That's all. Okay, so that's how we determine existence of a partnership. Right, so that's your question 1. Okay. We turn to page 79. This is June 2011 question. It's personal tax, 25 marks. Now the question by itself is not long, okay? But then it can be quite tricky, especially if you're not careful, okay? Because there are things that you got to consider carefully. What's the treatment? Alright, now they ask number 1, state with reason why Juliet's consultancy service is taxable in Malaysia. Why? Okay. Now state the class of income under which consultancy fee is taxable. Give 3 reasons that you apply this. Now that's why if your 6 marks you made a mistake, your part B is substantially affected. Okay, now that was the previous examiner, like Mildred. That's why when she asked question like that, the students' performance are very poor, because last time question all not like that. Okay, so I find that this kind of question, if you ask me, is more difficult, because if you do not know how to handle, you don't know what is happening. Okay, and when the student look at A number 2, when they ask state the class of income, a lot of students don't even know what she's trying to ask. So the student just write special class of income, because when you learn, there's only one thing you learn in tax, got the word class of income, called special class of income. You know, when you learn withholding tax, that means the students are not even thinking. Just see which class of income, they just special class of, because there's only one class that you learn. You know, now this is a problem that we see here. Now that's not what she's asking. She's asking which type of income under section 4. Is it A, B, C, D, E, F? Where students go and mistaken this as the withholding tax issue. Okay. Now then B, they say explain the treatment for item referred to in note 3 to note 6. The treatment, sorry, it's not affecting B, affecting C. Okay. So you must explain the treatment to note 3 to note 6. Then C, compute the tax liability, now which only 5 marks are being given. Okay. Now list 3 advantages of an individual being a resident. Now you can see that the whole 25 marks, 5 marks for computation. That was why people complain about her paper. Okay, wow, 25 marks, only 5 marks compute, 20 marks just to explain. You know? Okay, I will go through with you the point. Alright, now some of those things I'll just write to you lah, so I don't have to write the full answer. Now Juliet is a foreign national who is a tax resident in Malaysia. Is a dancer. He performs for Malaysian soulful dance company, both in Malaysia and around the world. The detail of his income and other particulars for the year ended 31st December 2010. Number 1, he's given a salary of 15,000 a month to perform as a dancer. And under the terms of the contract, he must work exclusively for Malaysian soulful dance during duration of the contract. And that the same contract provide that when he's overseas, he's required to do consultancy service on the dancing technique, and the company pays him 30,000 for each assignment. And the payment is made to his bank account in England and is not remitted into Malaysia. And he receives 60,000 in total. So now they ask you, this 60,000, is it taxable? And number 2, if you say taxable, which class of income that it should be? Now, before we move on with the next part. So if you look at the issue that we see here, now the income is taxable because it is Malaysia derived. That's the main point. I just give you the key point. But why do you say that it is Malaysia derived? Now, to determine derivation, the kind of income is very important. So what income is this? Now, it has to be employment, right? If you read this, it has to be employment. Now, why is it employment? Number one, he's given a salary. He has a salary in the contract. And the contract needs him to go overseas. The contract says you must work exclusively for me. I pay you a fixed amount. Now, you cannot have an employment contract that the employment contract together has a business. Employment is employment. Business is business. The contract is employment, then everything is employment. So if this is an employment income, then 13(2)(c) will apply, right? Because you perform overseas duty incidental to the employment exercise in Malaysia. That's why income is Malaysia derived. Okay, number 2. Which class of income is that? Now, it's an employment income. Reason: he's paid salary, which is a form of employment remuneration. He has to work exclusively for SOFU. Okay, so there's no freedom. He's subject to control by the employer. Okay, number 3, the consultancy is part and parcel of his employment duty. Because it's related to dancing. Okay, now the services are binded as per the employment contract. So you're doing it as part of the contract. Now there's one more point that if you read on, you also notice that he received EPF, which is a very strong indication that this is an employment relationship. Now we just need any 3 reasons. So I give you 5 reasons over here. So you just write any 3, then you get the answer to part A, number 2. Okay, now let us move on and continue reading the question. Now it says now in the question in note 3, which you must explain the treatment later on. They say Juliet is married to June, a disabled dancer, who has a 5-year-old child, Candy, from her previous marriage. June teaches dancing to the deaf on a voluntary basis and earned no income in 2010. Candy lives with her mother and received child support from June, ex-husband Simon. Okay, so one by one. Juliet is married to June. Okay, so far they tell me that June has no income, right? So if June has no income, what do? You're going to claim Y relief, right? Correct, huh? Okay. Candy is June's children, the child from the previous marriage. But now June has no income already. So June will not do tax com, right? Okay. So can Juliet, the husband, claim child relief? Can or not? Can. On what basis? What child is this? It's a step child. Okay. Now this child is receiving support from the ex-husband as well. So the relief will be 50-50. Correct? Because when there are two persons claiming on the same child, you take half. How much should the relief be? It's a 5-year-old child, so the relief is 1,000. You share half. Now you explain all that. Okay? Okay, number 4. Juliet has a son, Brighton, age 16, from previous marriage to May. So he also had a son from the ex-marriage. The son is 16-year-old. So Brighton is now pursuing a degree in University of Neurophysics and he is blind. And Juliet maintained Brighton exclusively. Okay, so exclusive means no one will claim with you, correct or not? So you're going to claim relief on the child. What relief you're going to claim? How much is that? How many thousand? Huh? How many thousand? 5,000 or 11,000? 5,000. Why not 11? Because the age factor. He is only 16, not yet 18. So it's not 11. Okay? If he's 18, then he can claim 11,000 because the child is physically disabled. Alright? So the age has a problem on the amount. Okay, Juliet contributed 3,000 to EPF, 1,000 to approved widow fund. Now both are contribution to approved fund. Okay? So you can claim up to maximum 6,000 because this is contribution to approved fund. Now, but you claim together with what? With life insurance. Now the life insurance, if you see they mentioned there's a life insurance for May. Who is May now? Ex-wife. So is ex-wife qualified? No, because it's not your wife anymore. Life insurance for June? Yes. Okay, life insurance for June? Yes, because she is your wife. Deferred annuity premium 2005. Can you claim? Yes, maximum 3,000. The answer at the back is not correct one because the law changed already. Okay, so you can claim up to 3,000. So no issue, you can claim all the 2005. Now, so all these are the treatment. So now we compute the tax for Juliet. Section 4B, employment. Salary 15,000 a month. The fee is 60,000. You remit or not is not important. Okay, because it's very Malaysia derived. Finish. No other income already. Gross adjusted statutory aggregate. I don't see donation also. So personal deduction 9,000. Deduction for the wife. Now the wife is what? Disabled dancer. So the wife is disabled. That means 3,000 plus 3,005. Or you can show wife and then disabled spouse and claim extra. Okay. Now, so other than the wife relief, we have Candy. 50% of 1,000, you claim 500. Brighton. So Brighton, you can claim being disabled exactly 5,000. EPF and life insurance and the approved fund. So is 5,000. Deferred annuity 2,005. So the chargeable income would be 211,500. Now they want you to work out the tax liability. So on the first 100, the next 111,500, I didn't bring my tax rate. I got. So the first 100 is 13,850. This is the EPF 3,000. This is the contribution to approved widow orphan fund. This 1,000 is the life insurance for June. Yeah, it's part of the contribution. The law say contribution to approved fund, and EPF is just an example of approved fund. Okay. Alright, now that's it, part C. Okay, the last part, what are the 3 advantages of being a resident is very simple, right? Resident, you get tax relief. Okay, so you get tax relief. So you can just explain like example of what relief, okay? So just to tell what's relief. So that from total you minus relief, you get lower CI. Number 2, your tax rate is scale rate compared with non-resident, which is flat rate. And number 3, you get tax rebate. Now, what rebate? Example, if CI does not exceed 35, you get 400. Okay. Now, so actually, I mean, I would prefer that when you write, you explain like that, okay? But then when it comes to the actual marking, we just see the 3 word only. You just say get tax relief, we give you 1 mark. You say scale rate, we give you 1 mark also. Then we say get tax rebate, 1 mark also. But in the class, professionally, I don't encourage you all to do like that, okay? I need you all to write proper answer, okay? But in comes to marking, examiner say it's okay lah. You just see the word, give 1 mark, follow on, okay? Right, so there's another personal tax question, okay? Right, so we stop here for the tutorial. Continue later after class, 6:30 RPGT, okay? So take a dinner break.